Hello everyone. Today I'm going to give you an outlook over the MCX FNO natural gas for the period 21st of November to 25th of November. Prior to starting with the technical outlook for the coming week, let's take few seconds to review the last week technical outlook and its outcome. So last week, as on 14th of November 2022, natural gas future was trading at around 476, and as we can see here on the charts, since last few weeks we have been mentioning that the counter is trading in an oversold zone, holding over 400 mark. There can be a pullback attempt towards the highs of 550 to 600, which can be looked for contra trading shorts. So in line with the view, a week before we have seen a pullback towards the highs of 592 before slipping down back to 476. And last week we have mentioned that there will be a kind of range bound trading sessions with a buy on dip at around supports towards 420 to 380 odd levels, but any pullback towards 550 and higher levels can again be looked for contra trading shorts. So this was the outlook which we have shared last week, that the broad trading zone for natural gas can be between 400 and 600 for next few weeks to come with downside cap, but at the same time any pullback towards 560 600 remains a strong hurdle which can be looked for some kind of contra trading short. Now if we see how things panned out, so last week we have seen that natural gas made a low of around 470 before bouncing back and ending the week at around 513 in green, 7.7% up. So it formed a kind of bullish candle on last week, but that candle is still within uh, the ambit of previous week red candle, which indicates that the upside still looks capped, and any pullback towards 570 to 600 mark can be looked for contra trading shorts. On the lower end, dip towards 450 and lower can witness some kind of buying interest. Now, this view is because primarily if you see, then this counter has corrected from the highs of 800 to the lows of around 400 in last few weeks and entered into an oversold zone, and thus the pullback was quite obvious, which we were anticipating, and in line with the view, though the pullback was there, but as this counter has breached down below its falling trend line support, so we were expecting any pullback towards the highs of 550 and 600 can be looked for some kind of contra trading short strategies in natural gas, expecting retest of its mean price of around 450 to 400 mark. So in line with the view, in last 4 5 weeks, we have seen that the pullback was there, but all those pullback has encountered with the selling pressure. Last week, it ended at over and above 500 mark. So for the coming week, what we can expect is that there will be a range-bound trading session once again with buy on dip and sell on rise outlook. So on the lower at 420 and odd levels can be looked for contra trading long strategies, and on the higher end, pullback towards 580 and higher can be looked for kind of short strategies in natural gas. So till the time it is trading below 600 mark, the counter is expected to remain under pressure. At the same time, on the lower end, because this counter still continues to remain in a oversold zone, 420 to 400 can be looked as a silver line support for bulls. In line with the strategies, based on the technicals and derivatives of MCX, we have recommended a crude oil strategy as on 18th of November when it was trading at 6720 mark. It's a three-leg strategies with a slightly positive bias where we have recommended buying in 6500 call and selling in 6600 call, followed by buying in 6700 call. So two buys and one sell for the expiry 15th of December. And as we can see here on the charts, in this payoff diagram, that the break even of this strategy is at around 7050 mark. That means closing over and above 7050 as on 15th of December, this strategy will be in plus. And on the flip side, below that, the bias will be negative. So the maximum risk in this strategy is below 6500 mark. If the expiry of 15 December is below 6500, it can lead to a loss of around 42,000 mark. On the flip side, closing over and above 7050 mark, the bias will be positive. And as and when it moves beyond 7050 mark, the gains will start accumulating. That means because two legs are on the long side and one is on the short side, the higher it will move, the maximum profit it will give. For example, as on if the expiry is at around 7500 mark, this crude strategy will give a profit of 47,200 per lot. The strategy is open, and last week we have seen that crude oil actually ended slightly in red at 65.40 odd levels. So this strategy was marginally in red. The other strategy which was initiated on 14th of November was in gold futures. When gold was trading at 52,580, we have recommended once again a buying in gold. And post this initiating this strategy, we have seen that gold future made a high of around 53,200 mark before slipping down back to end the week below 53,000 mark. So this strategy was initiated as on 14th of November, and as on 16th of November, this strategy was giving a profit of 11,400 mark. And because this strategy is valid till 24th of November, we are still holding up the long positions. Few other strategies which we have initiated in this series was in gold. It was initiated on 2nd of November when gold future was trading at around 50,750 with a long bias. And as on 9th of November, we have taken partial profit, but last week it ended at around 38,000 profit. The maximum profit in this strategy is on 24th of November if the expiry of gold is over and above 51,000 levels. In that scenario, this strategy can fetch us a profit of around 44,000 per lot. Other strategy was in natural gas. When natural gas was trading at around 493 as on 2nd of November, a pullback strategy was expected and initiated with a hurdle at around 600 mark. So we have gone long in 480 call and sold 600 call in the ratio 1:2. So as on 7th of November, this strategy was giving a profit of around 16,750. The maximum profit in this strategy is at around 600 mark. If the expiry of 23rd November is around 600 levels, it can even fetch the maximum gain of 1,19,250 per lot. Currently, the counter is trading at around 513 mark. Another strategy was initiated on 2nd of November was in crude oil. Again, this strategy was a positive bias. Post initiating this strategy, we have taken partial profit in this strategy as on 7th of November when the strategy was giving a profit of around 9,700 per lot. This strategy has expired as on 16th of November. So these are the strategies which we have initiated based on the technicals and the derivatives outlook of MCX. If you found our view relevant, then you can contact us on the given mail ID and the contact details for our future reports and the strategies. Thank you very much for your time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.